everybody. Hope you are well and staying warm in this cold snap. Hope you had a great family day, long weekend, and Valentine's Day. One quick note before I share some of the charts. Uh, the RSP deadline is March 3rd for the year. So if you're planning to get RSP contributions in to use on your 2024 taxes, be sure to get those in sooner rather than later. March 3rd is the deadline. So as far as charts, wanted to share a few things. We've been talking about diversification, how those tech names really were the driver in the markets, especially in the first half of last year. Starting to see the markets broaden out a bit. Last week in the markets, those tech names were the main driver, as you can see here in this first row or first column here. Technology up 3.1%. And you can see how the S&P overall was 1.5. But if you look back for the first 6 weeks or so of the year, you can see that technology, although it was positive, not up as much as the S&P 500 at 4%. And you can see some of these other sectors benefiting even more. Communications, financials, materials, all very positive and up higher than the average and much higher than technology. So that broadening out we talked about in the markets. Again, just indicator and proof that you need to stay diversified both in geographies and in sectors, as well as different asset classes to really help you as you move forward and smooth out that investment line. A little bit of negativity here, which I don't generally lean to, but just to be aware that we will get some volatility through the year, and very likely, or the potential that it could be coming sooner than later. The second half of February, if you're going back to 1950, second half of February has always been a little bit weaker. You can see, looking at the percentages over here, we're not talking about giant changes when you look at the percentage wise, but the second half of February generally a little bit weaker. So we can expect, or if there is some weakness, it does make sense. And again here, the first quarter of a year after a presidential election, a little bit weaker as well. Again, you can see that that's still positive, just a 0.1% positive return on average, and up 55% of the time. But that is weaker than the majority of quarters, as you can see in the rest of a 4-year term after an election. So makes sense if there's a little bit of weakness or a little bit more volatility as we kind of chop through the markets here the last half of February and potentially into March as well. But don't want to leave you on a negative note. So this is a bit small, but if the markets are positive by over 3% in the US into Valentine's Day, which of course we were up about 4%, leading into last Friday's Valentine's Day markets. What do they do the rest of the year? You can see the average is a 13.7% return for the rest of the year, and up almost 94% of the time. So again, just picking a bit of an arbitrary day on Valentine's Day, but if the markets are that positive 6 weeks into the year, almost always the returns the rest of the year are positive and above average, because you can see the average there, they would be up 7.7% and only up 73% of the time. So 13.7 and up 94% of the time the rest of the year. Good sign for sure. So like I said, expect some volatility as we've kind of been mentioning. Markets outlook still positive, but likely be some volatility and potentially even short-term volatility as the end of February is generally a little more negative. Not necessarily down, but a lower return than the average would be for the rest of the months of the year. So keep that in mind as we move through the next couple of weeks. Again, RSP deadline March 3rd, so if you need to top up your RSP, let me know how I can help. Otherwise, we'll be back at you with another video in a couple of weeks. Take care.